A lot of people are asking the same question right now. If oil is such a big issue, why doesn't America just keep all of its oil here? Stop exporting it and only use American oil for America. On the surface, that sounds patriotic. But the second you actually follow how the oil system works, you realize this isn't just a flawed idea. It would come with catastrophic consequences. The first problem is the most basic problem. The United States is one of the biggest oil producers in the world. They produce about 13.6 million barrels of oil per day. But the United States also uses around 20 million barrels of petroleum per day as well. So right out of the gate, we don't even fully cover our own demand. So naturally, people jump to the next idea. Okay, fine, we'll just drill more. And that sounds simple until you realize that completely ignores how the entire oil market works. Oil is a global commodity, meaning companies don't buy oil based on patriotism. And they don't sell oil based on what sounds good in a political speech. They sell oil based on price. So if oil is selling for $80 here, but overseas it's selling for $100, the oil doesn't stay here. It goes overseas to where they can make more money off of it. So if you actually want to force oil to stay here, you don't wait on companies to feel generous, as that would never happen. You would have to wait for the government to step in and ban the exports and cap the prices here domestically. And the second you do that, you've changed the entire system. Now you are no longer dealing with the free market. Now you are dealing with government-controlled pricing. And that's where things get very destructive, because the entire system runs on price. When price goes up, companies produce more. When price goes down, companies produce less. The price signal is what tells companies if it's worth the risk to produce more oil or not. So the moment you override the process, you don't fix the market. You actually break the whole structure that drives the free market. Now let's go back to the just drill more argument. People will say, even if the markets get distorted with the price, we still have to drill more to keep up with demand, right? That's not how this works. Oil companies do not drill because a country needs more oil. They drill when it's profitable enough to actually keep up with the risk. That's the part that people keep skipping over. The question isn't, do we need more oil? The question is, are companies willing to risk billions of dollars at a capped market to drill more oil? And the answer changes immediately when you start capping prices. Which means if the profits are capped and the risk increases, that means there's no incentive for companies to drill more. The companies will actually become more cautious because now you have a whole system where the upside is completely limited. So instead of increasing supply like you wanted to do, you have just removed the entire incentive to create more supply. And if that was the only problem, that would be bad enough. But it gets worse because even if companies wanted to drill more oil, the oil production does not scale cleanly. You don't just turn a dial and get more oil. The best wells get drilled first. The easiest locations and the cheapest locations, they get drilled first. Those locations are the locations that create the most amount of profit with the least amount of risk. What's left after that is the harder locations and the locations that cost more to build on. So look at the trap you've created. You're trying to force more production while it's getting more expensive to drill more oil, and at the same time, you're capping the profit limits. That's completely insane. You are literally making production harder and less profitable at the same time. And that's where the United States gets even more vulnerable, because most of the United States oil comes from shale. Now, shale is different than what a lot of people imagine. A lot of people picture a giant oil field that produces for years and years. That's not how shale works. Shale produces early in its first year of production. 60 to 70% is gone in its first year. So shale isn't a system that you can just pause and coast. It only works if you can constantly drill new wells to keep up with the declining wells. So connect that with what you just did. You've capped prices, you've limited the profit margin, you've increased the risk, but now you need new wells and you have less money to build these new wells with. So these replacement wells do not happen at the pace that needs to happen. That means that production doesn't just slow down, it falls off a cliff. Not because America ran out of oil, but you've destroyed the entire incentive structure. So now your plan to keep more oil here is actually doing the opposite. Now you're creating less oil here. And if that wasn't bad enough already, you run into another wall. Oil is not just oil. The United States produces a lot of light crude oil, especially when we get it from shale. But many of the United States refineries were built to refine heavy crude oil. And there's a reason why. Because throughout history, the United States has imported massive amounts of heavy crude oil. We use our refineries to refine it into gasoline, diesel, and jet fuel and sell it throughout the world. That means our refinery system was built for global trade. It wasn't built to be some sealed United States domestic-only production system. Now you're trying to force refineries to rely heavily on oils that it wasn't optimized for. That means lower efficiency and a higher processing cost. And if refineries are forced to work less efficiently, then margins get squeezed even more. That means you've created the worst possible type of squeeze. Higher operating pain. We're not selling our oils we're making from our crude. More risk. Now they spend more to make less. That's not how you increase supply. That's how you shut it down. And wait, there's even more. Here's another thing people miss. The United States does not just export the crude oil. The United States exports massive amounts of refined oils. They take in the rough crude oil and then they process it with our refineries and make diesel, jet fuel, and gasoline, and we export it to other countries. So now you're not just reducing oil efficiency, now you're cutting off revenue streams for these companies and even political leverage we use. So then people might just say, build new refineries, we'll fix it. No, you won't. That's just another fantasy people throw around without actually thinking through it. You can't just flip a switch and create new refineries. Refineries cost billions of dollars, and they can take 10 years, 20 years, or even more to make. This is a decade scale problem. So step back and look at this whole situation that we're in. Production is decreasing because shale needs constant investment. Refining gets hit because it's not optimized for the type of oil we produce. Exports are getting hit because you're reducing our ability to sell around the world for higher profit margins. The infrastructure we need to rebuild the system costs billions of dollars and can take many years to rebuild. And we're still not done. There's even more issues with this. The same companies that you need to drill more, you've just damaged financially. Oil companies are publicly traded companies. They rely heavily on investor confidence and their stock price. When investors see a world where these companies' prices are capped and it has government restrictions on them, these investors leave almost immediately and the stock price crashes. And when the stock price crashes, it makes everything harder for the company. Capital becomes harder to raise. Borrowing money becomes more expensive. Expansion projects are very hard to fund. And oil production depends on constant reinvestment. So when the money slows, the production slows even more. This idea does not create energy security. It dismantles the system that produces energy in the first place. And this doesn't stay contained to the United States, because the United States is one of the biggest energy suppliers in the entire world. So if the United States shuts off exports, it makes the demand worldwide increase. And when the demand increases, prices spike. Our allies lose a key supplier, and our enemies gain more leverage. That's the part that makes this even crazier. You're not just hurting the United States, you're even hurting all of the United States allies. You're weakening your own oil companies, you're weakening your allies, and you're giving leverage to your enemies. So when people say, why don't we just keep the oil here? What they're really proposing is sabotaging the entire system that produces oil, and then pretending you'll get more oil because of it. This is how costs spread through manufacturing, food, transportation, and the rest of the economy. You turn a simple political slogan into this full-scale political energy crisis. When you try to force a system into something it was never designed to do, that's when you get instability. And in the end, that's where people get this idea completely backwards. You don't get more oil by restricting the system. You get less at the very moment people need it the most. If you've gotten anything from this video, please like or comment, as I'm a very small channel and every like helps tremendously and is greatly appreciated.